One of the biggest complaints about the government's efforts to put a floor on this property crisis has been it's been a piecemeal approach, for one, and it hasn't necessarily borne the fruit of the policy yet. And also, the implementation has been criticized. So why have we not seen a floor being put on it yet? Because confidence keeps dropping, contracted sales keep dropping, and defaults keep on rising. So this is interesting in that we're hearing from sources that already, after the PBOC announced last week that it would have this nationwide program to provide about 300 billion yuan, 41.5 billion US dollars in cheap funding for SOEs then to go in and buy up the excess inventory that is out there. There's 3.6 billion square feet of unsold inventory of homes in China as of the end of 2023, the highest since 2016. So there's an urgency here. And this story that was a Bloomberg scoop late yesterday, essentially saying China's mega banks are urging those branch managers to act quickly, essentially, to get loans out to SOEs so they can buy up those unsold homes. Now, we don't know if this is going to lead to a massive surge in new lending, because again, they're also being urged to do the proper due diligence and again ensure that the funds that are lent out are not used elsewhere. They're going to be used for the intended purpose of buying up unsold units in pennies on the dollar, and then perhaps to turn into affordable housing, where other areas like the stock market could get better returns for SOEs. I'm not implying that SOEs would do something so nefarious, but it has happened in the past.
And Steve, in fact, there was another government program back in 2022 that offered developers loans guaranteed by the state. How did that sort of play out?
Yeah, so there was a program back in 2022 where authorities would basically lend developers with loan guarantees by this state-backed China bond insurance company, okay? So that was intended to give a support signal to developers in the market that they would support developers. But essentially what has happened over the time is it hasn't provided the liquidity necessary to prevent this wave of defaults. Agile is one of the latest ones. Now, Agile, it missed a payment on a publicly issued dollar bond for the first time last week. And Agile is one of more than a dozen developers that issued yuan notes guaranteed through the China bond insurance company. Now, so far, according to Bloomberg scoop that came out this morning at 7 a.m. Hong Kong time, at least 13 private developers, including Agile, had issued a total of 36 bonds via the program, with only $5 billion raised. That's just a drop in the bucket compared to the size, obviously, of the liabilities. And without a visible improvement in contracted sales in China, and of course, sales dropped again in April, without a sizable increase, most likely the defaults will continue by these private developers that just don't have the proper liquidity. So that program in 2022, which was supposed to indicate to the investors and to the market that the state would come to the rescue, hasn't necessarily panned out. This program that was announced by the PBOC last week is a different take on that, essentially to buy up excess inventories that I mentioned to Annabelle just a minute ago. And that, again, is just showing, again, that the policy in 2022 didn't work. Other piecemeal policies have not necessarily worked to restore confidence and improve the sales at these developers, which is really the only solution to prevent a further wave of defaults at this point.